This is a podcast script with two speakers, Ethan and Brooke.
Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. It's Tuesday, November 11th, 2025, and we're here to break down all the market chatter from yesterday, November 10th.
That's right, Brooke. Our AI dug through a mountain of discussions, flagging a really high volume of posts across a wide array of different stocks. The sentiment is quite mixed today, showing both promising growth areas and some significant risks that definitely need our careful consideration.
Absolutely. Let's dive right in and see what's caught the market's attention.
First up, we've got Meta Platforms, symbol META. Now, the community sentiment here is overwhelmingly bullish, Brooke. Users are showing strong confidence in Meta's long-term growth and, honestly, in management's ability to just keep printing money. Despite a bit of a dip, the consensus is to buy the dip, with huge faith in their strategic AI investments for future growth. Their revenue growth is a robust 26.2%, and net profit margins are sitting pretty at nearly 31%.
Well, Ethan, while that bullish sentiment is certainly there, and the KPIs you mentioned, the 26.2% revenue growth, the 30.89% net profit margin, and an impressive 32.64% return on equity, do paint a strong financial picture. But we also saw an analyst adjust their price target slightly from 900 down to 800. Still high, yes, but it indicates some recalibration. The massive $600 billion commitment to AI data centers by 2028 is a huge bet on the future, but the payoff isn't guaranteed yet, and some users still express skepticism on AI monetization.
True, but those investments are exactly what gives them that future potential. And the fact that they're finding off-balance sheet financing shows aggressive growth strategy. Given the strong fundamentals and the conviction in their AI future, I think Meta continues to look promising. Previously, we've rated Meta as buy many times, with a couple of stay away and cautious buy ratings sprinkled in. But our last rating was stay away just a few days ago. So I think it's fair to say we're seeing an upgrade here.
Based on the strong current financial health and the strategic push into AI, which has a clear path to improving future performance, I'd agree. My final verdict for Meta is a buy.
Excellent. All right. Next up, we've got New Fortress Energy, NFE. Now, the buzz around this one is overwhelmingly bullish, Brooke. Users are really enthusiastic about its future, highlighting some potentially massive catalysts like strong leadership, political connections, and new divisions like Klondike for AI data centers and Zero for hydrogen projects. There's even talk of a significant short squeeze potential, and that it's extremely undervalued at a price to book of 0.28. It's truly a story of massive potential, with some users even predicting a rocket ship emoji moment.
Hold on a minute, Ethan. While the community is certainly optimistic, the current KPIs tell a very different and, frankly, a much more concerning story. This stock is alarmingly close to its 52-week low, trading at $1.24 compared to a 52 high of $16.66. We're talking about negative revenue growth of nearly 29% and a net profit margin of almost negative 50, meaning they're losing money hand over fist. And let's not forget the absolutely staggering debt-to-equity ratio of over 675. That's not just high, that's financially unstable. News reports are even confirming that NFE is weighing a debt restructuring plan to avoid bankruptcy.
Wow, that is a stark contrast, isn't it? The community really believes in those future projects and political tailwinds to turn things around, especially with that low price to book. They see a massive opportunity for a turnaround if those multi-billion-dollar deals for Puerto Rico and Louisiana FLNG come through.
And that's the key word, Ethan. If. Those are future possibilities against very current, very severe financial distress. This company has never been rated on our podcast before, and for good reason. The market has already priced in significant negative events.
Given those alarming figures, Brooke, it sounds like even with the high community optimism, it's a huge gamble.
It is. My final verdict for NFE has to be stay away. The current financial health is just too precarious.
Understood. Moving on to our third stock, Tesla, symbol TSLA. There was some talk circling yesterday suggesting that potential political promises might fire up retail traders again. And naturally, a popular stock like Tesla gets mentioned in that conversation. The posts seem to hint at a renewed speculative interest.
Yes, Ethan, but the community discussion immediately shut that down. Users overwhelmingly dismissed the credibility of those political promises, essentially negating any speculative catalyst for TSL. And when you look at the financials, it's not exactly a picture of stable growth. Tesla's PE ratio is an astonishing 302.87. That means the market is pricing in an unbelievable amount of future growth.
A PE that high certainly demands perfection, and any stumble could be costly.
Exactly. Add to that a debt-to-equity ratio of over 17, indicating substantial financial leverage, and a beta of 1.872, which means it's nearly twice as volatile as the overall market. Recent news also isn't helping. Reports of Tesla China sales reaching a nearly 3-year low in October, and concerns raised by trustee security about the uncertainty of Tesla's AI projects. These are direct challenges to the growth narrative that justifies such a high valuation.
Tesla has been rated stay away or speculative gamble in almost all of its past appearances on the podcast.
It sounds like the high expectations are just not being met by current performance or clear future drivers, at least right now.
Precisely. The extremely high valuation, coupled with significant debt, high volatility, and negative news challenging its growth narrative, makes it a very risky play. My final verdict for Tesla is stay away.
All right, that was a packed session. Let's quickly round up today's candidates.
Investigate as buy. Meta Platforms, META. Investigate as cautious buy. None. Investigate as speculative gamble. New Fortress Energy, NFE.
And that's all the time we have for today on the Daily Hunt for Multibaggers.
This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for joining us. We'll be back tomorrow with more insights.
Happy hunting, everyone!